The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Stock of the day is JB Hi-Fi. Chief Executive Terry Smart saying the group remains cautious due to uncertainty in the retail market and heightened competitor activity. It comes as the group reported a net profit after tax up 8% in the first half of FY25. Shareholders to receive an interim dividend of $1.70. That's up around 7.5% from the previous corresponding period. And the retailer saying that sales in January this year were up 7.4% compared with the same time last year, notably pushed higher by the group's performance in New Zealand. So, what do our experts think of JB Hi-Fi? Phil, certainly one of those quality retailers, and I think it's actually at a record high today, isn't it?
Record high, despite I think consensus is a sell or maybe a hold, but analysts have been talking it down for quite a while. What amazes me about a stock like this, it's been around for a long time. It's so overanalyzed. The average analyst price target as of this morning was $85. Stock's at 104 or $100, having been as low as $55 over the last 12 months. So people have been waiting for their sales to fall in a heap. It was another strong result. It was a beat at the revenue line. It was a beat at the profit line. All divisions, firing on all cylinders. Even New Zealand's come good. New Zealand has been challenging. JB Hi-Fi Australia sales up, like for likes up nearly 9%. Good Guys up over 9%, and we saw New Zealand. I think it was also up 17.9%. So very strong in New Zealand. The second quarter was stronger than the first quarter, so they had a really good sort of Black Friday, Cyber Monday, Christmas trading period. So the company keeps delivering. Analysts keep saying it's expensive. Yes, there was a little bit of gross margin pressure. More pricing has come in. Lower Aussie dollar, probably not great for some of their imports. But if you look at the 20-year chart or 10-year chart on this company, people have been calling it for a sell for a while based on valuation. Valuation is just one thing that drives performance. If a company continues to outperform probably conservative analyst forecast going forward, this stock will grind higher. So yes, it looks expensive based on analyst price targets today. I think we'll get some upgrades in earnings in the next 24 hours. For me, this is a bottom draw stock. It's always going to look expensive. Quality companies do. It's a buy. It's a buy. It's a buy. Hang on for the ride. This could be $200 in 5 years' time.
Well, when is it not a buy? Like, given the share price keeps appreciating.
If you believe analyst price targets now, it's a sell, $85. I just think it's a buy until they have a hiccup, until margins get crunched materially, which they haven't been. It's a bottom draw stock, 10 years.
All right.
Yeah.
Okay. Do you agree, Mathan?
Yes and no. Look, it's probably one of the best players in the retail space, but it's retail. It's cyclical, right? RBA has mismanaged the rate hike cycle for a long time, and we've created massive property bubble, right? The average person, you talk to any young generation, they just can't afford it, right? And so it's a phenomenally debt-based spending cycle. So has JB Hi-Fi done well? Yes, they are one of the best at it. They probably shove more stuff in front of your face, apart from Chemist Warehouse. I think they're probably one of the best at it. And they execute. I've got no problems with that. But it's a cyclical. We're in a market where Combank has zero growth and it's trading at historical high multiple. If it's a yield stock, if you look at it against the 10-year bond yield, it should be probably trading below $100, right? So it's been pumped up by passive money, and I get that, and that's fine. And nobody's going to sell the banks because you bought it when it was nothing and you've got massive capital gains. Similarly, JB Hi-Fi, if you bought it cheap, you don't care. But because you've done well, and they're not going to go bust. But it is a cyclical. It will come down. That's what a cyclical is. That's why we call it a cyclical. The best retailers have done really well, but even the good ones have run into issues. We've seen with Lovisa, we've seen with Premier. And I think JB Hi-Fi, as good as it is, if you've been there since, very low prices, you don't care. Even if it comes back 20, 30%, it doesn't matter. But if you're looking at putting in fresh money, no, this is not a sector I would be jumping in. By default, if the RBA is going to cut rates, apart from the stupidity of it, what they're saying is things are going to weaken. So one of the things I've always learned, you always buy retail when rates are going up because you're spending too much. They're trying to stop you from spending. When rates are going down, that means you're not spending enough. So we've got to a point where this is trading like a high growth stock. It's a cyclical. I get it, they're one of the best at it, but it's a cyclical. It's priced in. I mean, this is not Nvidia, for God's sake. You can't spin it. They just sell stuff. I mean, it's just, anyway, I mean, that being said, if you've been there, you've done well for the right or wrong reason. Would you put fresh money? No. So at best, I'll say it's a hold.
Yep. Okay. I don't think the RBA is listening to you.
No. The numbers say they're going to cut.
Yeah.
It's crazy.
That is crazy.
All right. That is our stock of the day, JB Hi-Fi.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.